Thanks everyone for joining. Excited to share a little bit about our reflections on 2022 and then look forward to what we expect in 2023. So from like a macro blockchain cryptocurrency ecosystem point of view, 2022 is really, I think, going to be remembered as this deep bear market, which led to the collapse of many major and highly respected projects and companies. The fallout from that collapse is kind of still ongoing, and some are even leading to criminal charges, very high profile things like FTX, 3AC, and then lending platforms like Voyager, Celsius, BlockFi, and now also DCG and Genesis. In addition to kind of like the big collapses there, 2022 is really, I think the main trend was kind of an anti-trend or reversal of the popular trends in 21. So really speculative oriented things like DeFi, yield farming, speculative NFTs, DAOs. A lot of these really popular 2021 trends in 2022 were kind of reversed and became highly distressed assets. While this was difficult for many investors and entrepreneurs in the space, we think overall the net impact of this is going to be a positive, as we think many of these trends are really zero-sum or negative-sum enterprises. And so we think more capital, more mind share, and more users being directed towards more longer-term value-generating oriented investments and projects will lead to much better outcomes for the crypto space. So a kind of brief history of the trends in the Bitcoin SV ecosystem that we see from the past few years. They're kind of in this linear progression. So in 2021, we see that really as the year of blockchain infrastructure in Bitcoin SV. So dealing with the raw ledger is very difficult. If you're an entrepreneur, you want to start a business, that'll be very tough just kind of programming on Bitcoin. So the emergence of companies like Handcash, Run, Tokenized, companies which make it easier for developers to build businesses really emerged in 21. 22, this last year, we really saw the fruits of those infrastructure companies maturing. So we saw a lot more B2B and B2C companies building products using those tools, companies like Haste, DXS, and Asset Layer, which we'll talk about shortly. And what we think will be the big trend in 23 is these companies attracting a lot more users. So we think kind of a two-pronged approach. One, reduce friction in onboarding users will lead to a lot more people that are able to experience these applications. And then also the applications being in a better position to market, and also there just being more applications because of the existence of these companies.
And Dave, before we move on, I just want to jump in here because we have a bit more new faces today than the normal. We're going over the Bitcoin SV ecosystem here because at Unbounded, we invest in companies that are leveraging scalable blockchains to solve some of the biggest problems in the world. Right now, we think that the biggest opportunities are typically around micropayments and infrastructure that leverages micropayments, which all 6 of these logos and the majority of companies we're going to talk about today fall into. And of all the different blockchains out there, there's really just one that's developed at scale that we have seen have promise for being able to scale to meet global demand, and that's Bitcoin SV. So as a result, the vast majority of our portfolio are companies that are built using this blockchain. There definitely could be other blockchains that come along that scale beyond Bitcoin SV. Actually, one of our portfolio companies we're going to talk about a little bit later today kind of pivoted from building on BSV to building their own blockchain. But for now, we think Bitcoin SV has the most promise of any blockchain that's been actually out there and used by hundreds of companies in the world today.
Yeah, thanks for that, Zach. So some of the highlights in 2022 for that blockchain Zach's talking about, Bitcoin SV, massively increased transaction volume. So the first 4 gigabyte block was mined in January of 22. That was a big headline. And since then, it's really just kind of become the norm. So we're talking about 2,000 times more throughput capacity than possible in BTC. Despite this massive increase in transaction volume, we have continually reduced transaction fees, which is really core for us defining a scalable blockchain, like Zach mentioned. As the throughput and volume increases, the increased competition should lead to lower fees, not higher fees. So right now we've got 5 zeros and then a 7 cents median fee. So that's around 70,000 times cheaper than BTC, which is around 50 cents currently. And unsurprisingly, these in combination with the infrastructure companies I mentioned earlier is leading to a growth in the developer community and the number of products that are using Bitcoin SV under the hood. So we think that these are really, the core KPIs for measuring network health, and those were all very positive in 22, despite it being a bad year for the value of the token BSV. Some of the lowlights for 22, in October, we had some temporary network instability due to an empty block miner. Without getting too deep into the weeds there, basically transactions were being broadcast, which weren't being put into blocks in a timely manner. So people weren't losing funds, but it was just causing issues and hiccups with applications that were kind of dependent on the speed of the Bitcoin SV network. That was eventually resolved, but that short window where that was happening was definitely a low light. And then more broadly speaking, just the continued lack of support from the general cryptocurrency and blockchain space. So media coverage was not super favorable. We had some more kind of high profile delistings, making it harder to get the BSV token. And then there's not a ton of attention from most investors in Silicon Valley still on the Bitcoin SV system, which for us is good because we're getting good valuations, but that's a trend that we expect to change over time. So let's look at some of our portfolio company updates. This isn't an exhaustive list, and we have more of them in the year in review if you want to read that. So Handcash, they had a great year. Handcash is a micro nano payment wallet and also a developer ecosystem to make applications that use micropayments. Their big highlight was a partnership with Circle. So they are issuing USDC on BSV Rails, which I think will enable a lot more entrepreneurs and users to come into the space. You can also enter with USDC that's issued on other chains like Solana or Ethereum and kind of seamlessly transfer that to the one that's on Bitcoin SV Rails to benefit from the scalability and efficiency. They also added fiat on-ramps this year. So you can, in the app, top up with as little as $5 with a debit or credit card, which is great for onboarding users. Their Connect SDK, which helps developers build applications that easily plug into the micropayment ecosystem, saw a big increase in the number of apps built. And then they also moved from Spain to the US, which I think will position them very nicely moving forward. That move from Spain to the US is also a low light, as it presented a lot of difficulties, and things like that often are harder than you hope they would be. And they had steady growth, but they didn't have any major spikes or a huge killer app, although we're optimistic about that in 2023 when the USDC goes live.
So Dave, we actually have Alex, the founder of Handcash, on the call. Maybe you want to give him the floor for a couple of minutes.
Hello, everyone.
Hey, Alex.
Hey, I don't have very good lighting, so excuse me if I don't turn on the webcam today. So yeah, I think it's a pretty good summary. We're very excited about the possibilities that USDC is going to bring to the table. So far, I think about over 90% of the companies that we have right now have agreed to offer their apps on either only with USDC or partially with both USDC and BSV. So I think it's something that developers really like. And lately we have been studying why it's been difficult for some companies, and we have been running surveys and stuff in terms of what are the things that are kind of the bottleneck for them in terms of the services that we offer them, so they can really explode in terms of usage. And we have identified that we have to do a better job in terms of our business offering. I don't know how much into detail I have to get into in this call, but let's say that we have had very good communication with developers. They're really excited about the upcoming changes, and we think it's going to remove any drawbacks to adoption. in the coming weeks and months. And so yeah, and yeah, the process of moving everything to the US has been kind of complicated this year, and also the our visas had to get canceled because we had to the initial plan that we had for moving the company to the US had to change a little bit. So the visas that we were applying for, they didn't match with the structure of the company itself. But anyway, it's something that we just have to figure out another way of doing this. But overall, we're very excited about 2023 for Handcash. We have seen a strong growth, but as pointed out, nothing like a major spike yet. But we are seeing that that there's very little things that we have to address to actually get to the hockey stick stage of growth.
Thank you, Alex. Yeah, nice. Pleasant
Thank you.
surprise to have you here. Appreciate the more in-depth update.
Yeah, if you're not familiar with Handcash, download it in iOS or Android App Store. And then we also talk a lot more about it in the year in review, so check that out. Haste is another portfolio company. Haste is a micropayment gaming platform, in addition to kind of several other novel incentive mechanism creations that they've made. Some of the highlights from 2022 is they released their SDK to enable third-party developers to create these micropayment-based games and add it to their arcade. So that yielded a bunch of games. I think the majority of the games in Haste now are from third-party developers, which is really cool to see. They also incorporated a lot of new innovative uses of NFTs. So they created player cards, which are like a baseball card for players in the arcade, where you can earn revenue shares based on how those gamers perform in the arcade. They also released game collectibles, so selling skins for the game or different items that you can use in the game, which are tradable NFTs. And they also have a very popular NFT platform called Take It, which is doing very well. Similar to Handcash, their users grew significantly in 2022, and they also saw a lot of revenue, largely from using these new NFTs. And they've had a very promising start on their seed raise, which started in Q4 and is ongoing. The struggle for Haste is that ILP, instant leaderboard payout, the micropayment incentive mechanism, is really dependent on large scale to make meaningful revenue. So that didn't come in 2022, but like I said, they were able to generate a lot of revenue by incorporating NFTs and other kind of higher margin offerings. So Asset Layer is not a portfolio company, but it's an honorable mention. It's a company that was co-founded by myself and Jack Lasky, former Unbounded Capital partner, and uses a lot of the companies in Unbounded Capital's portfolio, so it's worth mentioning. Earlier this year, we launched the first Web3 game with user-generated interoperable NFTs. We've minted over 3.5 million NFTs, generating over 11 million blockchain transactions. So we've seen a lot of growth the past year. And then to end 2022, we launched our private beta of the platform. And we've already had 38 companies sign up to use it within the first 2 months. And like I said, we're working closely with Handcash, Run, and Haste Arcade. We enabled the game collectibles, which they released. The lowlights for Asset Layer really just had to do with fundraising being difficult given the kind of macro crypto environment. So our early 2022 fundraise didn't go as planned, but we're having good traction now as we try to raise our seed round in Q1 of this year. And with that, I'll toss it over to Zach to take the next couple companies.
Thank you. So Run has always been one of our standout portfolio companies. Notably, last year, they facilitated over 400 million transactions, more than the entire Ethereum network. Now, this might sound a little surprising for folks not familiar with Run or with Bitcoin SV, but Ethereum, because the network is so inefficient and often congested, a lot of the transactions don't actually happen on the Ethereum network. They happen on what are called layer 2s or even sometimes layer 3s, which are these generally extremely inefficient databases that purport to give you some benefit of blockchain, but really don't in really any case that we can think of, and then they settle irregularly to the Ethereum blockchain. Famously, when the Ethereum blockchain really wants to be used or there's some type of major sale going on, the transaction fees go from maybe the normal dollars or tens of dollars per transaction to sometimes thousands or even over $10,000. There's, even examples of where people have paid 6 figures in transaction fees in a few select cases. So this is kind of the opposite of what you would want in any type of blockchain system. One that as more people use it, it gets more expensive and more congested. So Brenton, when looking to design, what could be the easy layer for developers to facilitate, all sorts of, companies and software on a blockchain, he did his due diligence initially actually at Snap. So he was an early engineer at Snap and led their looking into leveraging Ethereum and other blockchains, and quickly realized it couldn't, handle anything that would be significant for Snapchat. So that kind of got him on the path of which blockchains are really scalable, and kind of asking those questions well before many, even us, were looking at that before Unbounded Capital started. So then he ended up starting what kind of was the early iterations of Run and Aldea, maybe about a year or so before Unbounded Capital started. It was one of our earlier investments in Fund 1, and grew to the point where for a period of time, it was the most used token protocol on Bitcoin SV, and more widely used than Ethereum in terms of number of transactions. Of course, there was less economic value exchanged in this through this company than through the Ethereum blockchain. But for us, if we're looking at a long-term investment, we want to see something that has the potential to grow a lot, not one that is kind of peaking now in terms of what it could handle. But for a number of reasons, while Brenton has had a lot of success in terms of adoption by developers and lots of transactions, he felt that there was a bigger opportunity to, rather than being a token protocol on Bitcoin SV, to leverage a lot of what he has learned from building the Run token protocol and building actually a new blockchain that uses the same cash system or UTXO architecture that is unique to Bitcoin and just a few other blockchains. And he very recently kind of cemented this pivot from Run to Aldea. And so far, what we've seen is that he's been able to do 15 million transactions per second in a testing environment. So of course, that's not the real on-chain stats, but this is by far the largest amount of transactions per second in a testing environment for any blockchain that's ever been created. So we've been getting to know Brenton, really like and believe in him, been working with him for a few years now formally, and we recently invested into Aldea in our second fund, and he's had a lot of traction so far in early conversations for a large Series A to be able to really scale this new blockchain up. And he's targeting hedge funds and high frequency traders once he eventually goes to market. So, and yeah, the lowlights for one, where that despite their kind of massive adoption, there wasn't a clear revenue model that ended up working. But overall, I'd say a lot of progress for Run and Aldea, especially with the recent changes. And this is kind of marks the first time since we started focusing on scalable blockchains that we really found one with promise outside of Bitcoin SV. So this is still very much early days, the testing environment. No other companies are using it, but we think if there is going to be someone that starts to put meaningful competition on Bitcoin SV, we're not aware of anyone that's better suited for it than Brenton at Run and now Aldea. So DXS is a company that leverages micropayments and an efficient blockchain to be able to offer investors and traders the ability to invest or trade in US equities and US equity derivatives in increments as low as 1 cent. So they're able, by leveraging Bitcoin SV, which today has roughly like a 1/20,000th of a penny median transaction fee, they're able to actually make a pretty nice gross margin on their tiny holding fees for even a 1 cent trade. And their average trader and user typically trades about $20 to $30 a week. And they're going after the billions of people that until DXS came along, they had no ability to be able to have exposure to US equities and US equity derivatives, either because the red tape was too hard using exchanges in other countries, or the minimums were too high for some of their exchanges in country. Many of their users are in kind of frontier markets like Nigeria and Indonesia. And since we invested shortly after they launched around 2 years ago, they have now done over $4 billion in trading volume. They also are quite transparent as a company, so they have extremely good public analytics. Dave, if you want to maybe find that link somewhere, I think it might be in the annual letter to link in the chat here. But yeah, you can kind of learn to pretty granular detail what DXS has been able to accomplish and exactly what open interest looks like, and to see different trends. So they've been able to do this on a relatively small user base, just in the thousands, and they haven't spent anything on customer acquisition or marketing. They've done a few marketing experiments to be better positioned, but similar to kind of Hand Cash, they've been working really hard to make sure that they could have a better UX and onboarding experience that doesn't involve having exposure to any volatile cryptocurrency, even if not directly. So shortly, both because of Hand Cash's new 5.0 that's coming out soon, that will be USDC native, as well as with their own stablecoin, they're going to do a revamp of their onboarding and their website, and you'll be able to access DXS without having to use anything but a US dollar or another fiat currency equivalent. Definitely some of the struggles for DXS were that the pretty extreme organic growth from their customers in their first year slowed down in the second year. That being said, from the experiments they've done so far, they're able to spend tens of dollars to acquire a customer, and the payback period, what they've seen is 3 to 5 weeks. They've only spent, kind of low 5 figures on that because they want to get those numbers down and improve the onboarding before spending more. But so far, it looks good despite the fact that organic growth has slowed down. We also think organic growth would likely increase once this USD denominated trading moves forward. And then, yes, a number of operational difficulties, as well as some minor fundraising difficulties, as most of the team is either Russian or Ukrainian. Many actually don't even live in that region, but just kind of given the war, there's a lot of folks that are scared and are basically discriminating against people that are Russian or Ukrainian because of this, which we're not a fan of, and think that it's great opportunity to back courageous founders that are building despite what's going on in their home countries. So PingMe was basically the last investment we made before focusing just on companies leveraging scalable blockchains as part of like an infrastructure type company. And it's been one of by far our standout companies in the Fund 1 portfolio. And what they are is an API for banks and fintechs, where they sell basically these APIs, which includes data for potential customers for lending products. So the main reason people pay for PingMe is to be able to underwrite more effectively and to underwrite at a lower interest rate. And their goal is to bring down the interest rate in emerging markets for business and personal loans, which is in the mid double-digit percentages, to something more comparable to what we see in countries like the United States. They've also built their own proprietary credit scoring system that pairs with this, that allows them to underwrite more effectively, besides just kind of giving the raw data to these banks. So like a lot of fintech companies, even if they have some kind of tier 1 bank customers that are not really affected by the recession, a lot of their customers are other fintechs that, because of what's happening in the macro economy, they're less likely to spend the money to use PingMe, or they're going to go to kind of a lighter version and reduce their revenue even if they stay a customer. But to the CEO's credit, Brendan Playford, he had a really strong opinion that there was going to be a change in macro tailwinds at the beginning of 2022, and they adjusted their strategy to primarily going after fintech companies, to going after tier 1 banks. And while it hasn't been as rosy as it was for kind of the really steep rocket ship ascent for the first few years, we think they're very well positioned. And once they close in some of these, 6 to 18-month processes that the banks have to be able to actually fully integrate PingMe into their underwriting process, we think the future, is bright for them. They're primarily operating today, I believe, in Nigeria, Uganda, and Kenya. So we made some new investments last year, Frobots and Slictionary in Fund 1, and RF Poker in Fund 2. We're not going to go as deep into these companies, but just Slictionary is a company that effectively monetizes something like Wikipedia. So rather than people just put their dictionary definitions or Wikipedia definitions up without any skin in the game, with Slictionary, you can do a bounty and say, hey, I want you to define unbounded capital. And whoever I kind of pick that does it the best, or whoever gets the most votes, will get this bounty. And there's always some type of, even if it's very low, economic incentive to define all sorts of words. And by actually having an incentive to improve and write definitions, we think that long-term Slictionary or something like it will be a meaningful competitor to, I think, what today is like the 7th most used website on the internet, Wikipedia. Frobots in some ways is similar to like a Haste or asset layer in that they've soon to launch and have built like an NFT bot game, but they've also built infrastructure for other gaming companies. So like, asset layer, one of their first products was Dogs. Frobots is their first main product is here's our game that you can play, but that's really like a proof of concept for the bigger and more lucrative infrastructure play for gaming companies that want to have NFTs and in-game items more easily. Then RF Poker might sound a little bit outside of what we normally do, and that's because it is. We met Monet through an introduction from one of the funds we respect most in the space, not in the blockchain space, but in venture capital, 1517. Daniel Strockman and Michael Gibson. Michael actually just wrote a book called Paper Belt on Fire, which I highly recommend. They together ran the Teal Fellowship for many, many years. And then they thought, hey, let's take what we did in giving $100,000 to people to basically not go to college and pursue building something. And let's do that in a venture fund so we actually capture the economics of that and can give more support than just kind of $100,000 in that network of Teal Fellows. So they're very plugged into high schoolers and college dropouts and people that didn't go to school that are starting incredible companies. And when they found this poker company, they contacted me because they wanted to get my opinion as a former professional poker player and someone who used to run a poker content business that solved some of the problems that RF Poker is trying to solve. My opinion, and I was shocked with how much this company was just doing everything right, especially for a founder who was still quite young. I believe he was either 19 or 20 years old when we first spoke. And something at Unbounded we've, I think, gotten better at is at the beginning of when we started investing, I think we cared too much about the market and the technology, and we didn't weight in our mental models and investment process as heavily as we should the quality of the person. And with Monet, it's someone, if you have the pleasure of meeting him, he is just hard not to be blown away by his focus, his intelligence, and his humility, and just always being willing to kind of listen to others and change something to just make it exactly what his customers want. So I saw someone who didn't really know how to play poker, and a year later built a better product for a number of things than anyone else, and also a product that at scale I think has a lot of potential to actually leverage blockchain in a meaningful way. So when we saw Monet and RF Poker, we knew that we had to make an investment out of the minority percentage of our total fund that can go towards things outside of the core thesis. So I would bet that RF Poker does leverage a blockchain in the future, but for now, sometimes you just see a founder in a company that is just so great you can't say no to. And the fact that I and one of my former partners at Unbounded were actually trying to solve a lot of these problems ourselves for years when we were in our kind of at a similar age, momentum on it, made it all the easier to kind of say yes to and understand how big of a market, not just the poker world is, but social gaming and golf and chess and how we could transform that. So more to come on RF Poker soon. I'm working on our kind of why we invested piece at the moment. So last fall, and I actually feel like almost half the people on this call attended our New York first annual summit, but this is something that we've been wanting to do for a while, where we showcase some of the top portfolio company founders in our portfolio, as well as some founders that we haven't invested, but we think are doing really incredible things in the scalable blockchain world. That went great, and we're going to continue doing that every year. We're also putting on another event, not the annual summit style, but with our new, just going into what is happening in the blockchain world and hearing a diverse number of perspectives that we're calling Unbounded Perspectives live in Austin. We're doing this the day before South by Southwest starts in Austin, where I'm based, on Thursday, March 9th. I'll drop a link to that in a little bit. We also launched last year and completed the close of our Unbounded Capital Fund 2. This is our first traditional venture capital fund structure and is allowing us to do what we've been doing for years at a greater scale and moving from investing primarily at the pre-seed stage to the seed stage of these companies. And then we've brought on Joshua Hensley, who is one of the smartest technical minds in the Bitcoin world, to serve on our investment committee. So I'll kind of keep this short. We have some of our big question askers on the call here that I'm sure we'll have some kind of more specifics about this. But over the last couple of years, especially, we've been writing publicly about why we think companies like FTX and BlockFi are very likely to blow up and don't represent a good risk reward. It's kind of easy to ignore that as everything was booming, but once a lot of these predictions started to become true, I think a lot of folks, especially those that lost money, have sobered up and realized that there's actually not a lot of substance to these, quote, crypto infrastructure companies that are making money off the speculation of what to us seem largely like glorified Ponzi schemes. So while people are saying, okay, crypto crashed a ton and that's the winter, and then maybe things will kind of pick up in the future, and like with all bubbles, when they pop, they kind of go down farther than the fundamental value, and there's a good opportunity. That's only if you think that there's actually fundamental value to the crypto space, which we think there is very, very little. So things that are zero or negative sum, like basically the entire world of DeFi, speculative NFTs, we don't think will have success in 2023 and will continue to struggle. We think that, the contagion that started last fall will likely continue. DCG has not blown up yet, but we think it is more likely than not to blow up based on what is happening with Gemini and Tether. It's hard to predict the timing of that. I think anyone that's been paying attention to Tether for some time sees that it's highly likely to fail and implode at some point, given the incredible amounts of fraud that the leadership team has committed and lied to the public on, and how we know that Tether has not been backed anything close to one-to-one many, many times. So unless there's a radical change in how that business is run, there's a blow up that's inevitable. Timing that, I think, is extremely difficult, and we don't say that we're able to do so, but Tether is definitely something to watch out for as a very big systemic risk to the crypto world. There's other things as well, but kind of the upside of this is that a lot of these folks that have lost money over the last couple of the last few months, since really the FTX blow up, especially, that have had money on FTX, it's a humbling moment and makes a lot of people just understandably be like, okay, I'm going to just stay away from all things crypto and blockchain. But I think for minority of those folks that are maybe a little more sophisticated, and they're thinking, okay, now is actually an opportunity for me to, rather than just stay away from everything about crypto and everything that excited me about this technology, to really be more honest with myself of, okay, I'm going to only make investments that have a lot of due diligence with them. I'm not going to just overlook that because I'm really excited about something or because the price is moving fast. And I'm only going to look in things that actually make perfect sense to me, not because my friends that I respect are investing in it. And I think that will lead broadly to a lot more capital going into the types of companies that we're really excited about. So even though the pie of capital that is going into crypto and blockchain this year is substantially smaller than last year, what I've seen personally, both in terms of the fundraising I'm doing for our second fund with LPs, as well as with some of our portfolio companies, is that it's been a lot easier for us to fundraise now than it was even 3, 6, 9 months ago.